Hey everybody, so this is going to be kind of like an emergency video, if you want to call it like this, because obviously we are seeing a bit of a market crash here today, especially in cryptocurrencies. Bitcoin alone down by 12%. We saw prices were already underneath 50,000 US dollars today. And of course, nobody knows really at the moment when is this going to stop. We are also seeing other risk on assets, such as the American stock market down here by 3.2% pre-opening already. Japan was especially hard hit for stocks, minus 8%. This is also something I want to explain to you later in this video, why Japan was hit so much and how that also ties all the way back then to Bitcoin. And you might have read about this as well, the Japanese yen, especially trading versus the US dollar here, also much, much lower. And if you kind of look online for the reasons that is happening, Financial Times here, for example, writing prices of stocks and other risky assets, that is also crypto, obviously, plunged on Monday as a sell-off that began last week accelerated after Friday's weak US job report stoked fears of a recession in the world's biggest economy. And this alone already is pretty funny. Yeah, we had much lower job data than expected, but remember in the past months, this is exactly what we were, or what the market was hoping for, because that is kind of the last brick where the Fed always said, you know, we want to see the job market slowing down a bit, because then we have a reason to lower interest rates again. Now they are pretty much indicating we are going to lower interest rates in September already, probably to 5% then. And you know, the market also doesn't like it. So that's a bit schizophrenic, but it's the number one reasoning you read out there for this crash happening. However, in order to find out what is going on a little bit behind the curtain, you're not going to read very much about this. We actually need to look at two charts. As I mentioned earlier already, you saw Japanese stocks, so the Nikkei 225, that is the main Japanese stock index, that went down massively. I mean, as a matter of fact, from its height, which it didn't do so long ago, it's down by 28% now almost. So this is really already for stocks really a major crash. And the reason the stock market in Japan is down by a much higher margin than what we are seeing currently in America, what we are also seeing in Europe, is the Japanese currency, the Japanese yen. You know, in the past really years, so if we scroll here all the way back down to 2021, we saw prices actually for the conversion rate between US dollar and Japanese yen still trading around 100. So you needed to pay 100 yen in order to receive 1 US dollar. And this has gone up all the way until it just recently peaked out up here at around about 162 US dollars. And this is very interesting. So you saw the Japanese currency weakening a lot. Why did it weaken a lot? It's not so much about one economy outperforming the other economy. This is due to the reason that of interest rate difference. So in Japan, interest rates have been historically for a very long time around 0%. Not so long ago, they were actually raised to 0.25%. Now you compare this to the 5.25% you currently have in interest rate in the USA. And then something happens that people will start thinking, well, if the interest rate in Japan is so much lower and so much higher in the USA, there's a difference of 5% currently, well, what I should do maybe is I should borrow Japanese yen for a quite low rate of, for example, 0.25%, and get US dollars for that I get 5.25%. And this is a trade that this is called a carry trade. So you buy a currency with a much higher interest rate in comparison to another currency. When I go long US dollar yen, I buy US dollar, I sell Japanese yen. And this has been happening a lot actually over the course of the last years, because you have the following fascinating thing. You can, for example, go to your bank if you're a hedge fund or something, if you go as a private person, they probably say you're not getting any money from us. And let's say you borrowed like 1 billion Japanese yen, which is worth around about 6.329 million US dollars. And you did this with the exchange rate of 158. So you still did this actually when we were up here close to the highs, right? And what happens then is you pay, this is a little bit simplified, of course, the real rates might differ a little bit from this, but roughly you would pay 0.25% for the 1 million Japanese yen in loan you took out, and you would receive 5.25% in interest rate for the US dollar you got for the Japanese yen, right? So at 0.25% for a billion yen means you pay 2.5 million yen every year in interest rates. That's at this exchange rate around about 16,000 US dollars. But on the other hand, for the US dollars you received 5.25%. So you make a profit of 316,000 US dollars every year. It's amazing, yeah? This is done with money you borrowed. And so you might think like, wow, why is not everybody doing that? And that exactly is the problem here. Everybody was doing this. So it started happening around here, beginning of 2021. And this is what drove the currency rate, the conversion rate of US dollar yen so much higher. Now you might ask yourself, of course, rightfully, well, but Dirk, what does that have to do with stocks? Does that have an impact on the stock market? Well, here's something that we all know sooner or later comes with market participants into play, and this is greed. So I could now also say, you know what? Instead of those 5.25%, because I'm the super awesome hedge fund manager and I promised my clients I'm going to outperform the stock markets. So instead of just giving them 2.5% or 5% in return per year, I'm going to take this money and I'm going to invest it not in like treasury bills where I get those 5.25% or put it somewhere with a bank where I get some interest rate. I'm going to invest it into the stock market or crypto market. So, for example, I buy here NVIDIA shares, which maybe are trading at 135 US dollars currently. So I can buy for my 6.3 million US dollars, roughly 47,000. Or I can, for example, buy Bitcoin at 72,000. I can almost buy 88 Bitcoin. So instead of going into treasury bills, I'm going all into the stock market. And if the following happens now, let's say the NVIDIA price really goes up, it goes to 180 US dollars. Well, you are now sitting not on 6.4 million US dollars or 6.3 million US dollars. You are sitting at 8.43 million US dollars. So you made a profit of 2.1 million US dollars. Same for Bitcoin. If it goes up to 95,000, you are suddenly sitting on a profit of 2 million US dollars. Means you made a return on investment of between 32 and 33.3%. And remember, you made this return on investment on money you borrowed from your bank. Now, the bank is, of course, not going to give you the money, just because they think you're a smart person and you know what you're doing and you're the super awesome hedge fund manager. They want to see some collateral. Collateral meaning they want to see some securities. Like, this is the same principle when you buy a house. The bank will make sure that you have a mortgage on the house, meaning if you cannot pay off your mortgage anymore, the house itself is going to belong to the bank and not to you anymore. So as long as the stock prices or the crypto prices here are going up, everything is going to be fine. The problem now is going to be if the opposite happens. And this is something we have been seeing happening for a number of days or weeks now. If we, for example, look here at the NVIDIA share, well, it has been going quite down. Yeah? We have had it here on the top, slightly over 140. On Friday, it closed at 107 US dollars. Pre-market, it's now trading at 92 US dollars. So let's now just, pretend okay, I bought it here at 135 US dollars, and now it's trading Friday close at 107 US dollars. And Bitcoin is suddenly trading at, where is it right now, 50,300 US dollars. So instead of a big profit, you are now sitting on 1.3 million US dollars of loss for your NVIDIA shares, or 1.9 million US dollars of loss for your Bitcoin position. So instead of making a plus, you made a minus on your borrowed money. So what is going to happen now? Of course, the bank is not going to be satisfied with something if you say something like, hey, eventually we'll go up again. Just trust me, bro. This is not going to happen. The bank is going to approach you to tell you, can you give us extra collateral? Can you put more money, for example, onto your bank account to secure these losses? And they will probably say something like, hey, we need 1.3 million or 1.9 million US dollars from you today onto your account. Otherwise, we are kind of forced to liquidate your position. To cap the losses that are making, that they are potentially making with this position you are, because they are afraid, of course, they are not getting their credit line paid back by you, because remember, you still owe them 1 billion yen, or 6.3 million US dollars that you received for it. So, and if you cannot do that, and this is really the problem we are seeing right now, you are forced to sell at least parts of your NVIDIA position. You are at least forced to sell parts of your Bitcoin position. And since this is happening for many, many entities, for many hedge funds now at the same time they are all forced to sell no matter what the price is. And this is why we see these sharp slumps down right now, for example, in Bitcoin. This is why we see the same for indices. This is why we see the same, especially for all those beautiful stocks like NVIDIA, like Apple, like Tesla, and so on, that have been outperforming the market by a great margin. I mean, you just need to see here this year's performance of NVIDIA. It was up by over 1,000%. So again, what eventually comes up must come down. It's a little bit like everybody trying to exit the elevator at the same time. They are all selling for prices, for any price out there, because their banks are forcing them to do so. Where is this going to end? Nobody really knows by the end of the day. However, historically speaking, when there's such a panic in the market, it sooner or later is going to be the bottom. So going forward, my strategy is going to be, I'm going to use prices like 50,000 in Bitcoin. I did actually earlier today already. Also lower prices like in NVIDIA, for example, or if you're more conservative with ETFs on stock index, to top up my position. Because historically speaking, things like this are rather short-lived. And one thing is for sure, once that is done, you're going to probably see a sharp turnaround. I also don't know, obviously, is this move going to stop here at 50K? Is it going for Bitcoin? I'm saying, is it at 40K, or are we going all the way down to 45K, or all the way down to 40K? This is something we don't know. We cannot know that. But historically speaking, those usually were very good times to really buy into the market. It's a bit like what we saw in 2020 when COVID started. We also saw these sharp dip down all the way almost to 3,000 US dollars. Well, and what followed then, of course, is history in terms of bull run. So don't panic. There is really no reason to panic, at least not if you're not trading leveraged, that is. Use these prices maybe to stock up your position a little bit if you agree with me. For me, it's important that you understand where are those price swings to the downside coming from. Fear of recession, which has been in the markets for such a long time now already, cannot be the only reason. The reason really is over-leveraging for probably institutional traders, for larger private traders that thought, this is like free money. I'm going to borrow Japanese yen, I'm going to exchange them into US dollars, and then I'm going to invest that market into those beautiful high-tech stocks that have gone up by 1,000% over the course of the last year. And this is probably going to continue. That's at least what they thought. Now they are all being forced out of the market. It's a little bit like somebody pressing the reset button. That's it for today. If you enjoyed this video, please leave a like, subscribe to the channel. Also, make sure you join our Telegram group. I just recently published a new indicator where I'm doing a free beta test. At the moment, you can find a sign-up form for that indicator also in the description of this video. Feel free to try it out. Share what your thoughts on this indicator are with me. We're going to see each other very soon again. Take care and bye-bye.